Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro from Sasfin Securities, Schalk, Louw, PSG, Old Oak. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag Stockwatch. Gents, thanks for the time. Schalk, let's start with you. Let's start with that inflation number out a little bit earlier. 3.3% inflation for August. Does this get us a rate cut tomorrow?
I hope so, but I think if we look at the consensus, currently still very much unchanged for now. I think Saab is going to play the waiting game. Do we justify a cut? Hell yes, I definitely think we justify it. I think would it help our economy? Well, I think a lot of economists feel it won't have a massive effect, but I do think that every bit of help we can get to get the let's call it unemployment numbers down, to get the economy growing again, it will help. So yeah, hopefully, let's hold thumbs.
Holding thumbs. David, do you have any deeper insight? David, you must have connections at that big building in Pretoria, at the Saab. Twist some arms.
You know what? No matter how loud I speak, they don't listen to me. So I'm on Schalk's side. I mean, if you just look at the pure, you've got a repo rate 7%, inflation today 3.3. Oh, it might go to 4. It might, we've got we've got to try and get it down to 3. I said, hold on a sec. Outside there, you've got an economy which is just collapsing. There's no growth. There's no momentum. Just give it the love. Give it something. Give 1%, 1.5%, because you can't do that. Anyway, no one listens to me, and I watch the market. I watch results coming out. I'm saying, if only we could have lower rates, but Lesetja and all those very clever people around the table know significantly more than I do about monetary economics. I'm just an accountant. I just know the cash book, that's all.
I'm not even an accountant, so I get no say on this. And yeah, okay, so we agree, probably nothing happening there. I think there's a window where they could do it, particularly if the US cuts big tonight. But we shall see. Let's move to some results. David, you're the accountant here. So momentum. The numbers confused me. I mean, who are they stealing from, or are they not? Because there were lots of big numbers, and then there were lots of minus numbers, and a lot of it didn't make sense. David, momentum results.
Well, if you ever go through insurance companies' results, nothing makes sense. Okay. I think they specifically write it to confuse you or obfuscate you, just to say, oh, I don't know what's happening here, put it aside. But I like the business. Ever since Hilly Meyer came back and Jeanette Marais took over, they've kind of repositioned this. This was always the ugly sister, always overshadowed by Mutual and Sanlam and Liberty and so on. But they've done a good job, and they're clawing back and doing very well. But I'm going to give a big but there. The one thing that's come through all along with all the insurance companies, they're slowing down new business. Whether it's Discovery, Mutual, Sanlam, the new business is slowing, and that's a look into the future. And that's what worries me, despite the numbers that have come through because of efficiencies and because they are stealing other people's clients. That's the only thing that you've got to watch out for, sustainability in a very tough environment, that it's being even held back by the Reserve Bank because they won't reduce interest rates.
No, but I like your point. It's now great, but maybe not into the future. Schalk, momentum for you?
Yeah, I'm on David's court on this side. I mean, it's a tough environment. So yeah, I think to add to what you've said, I mean, we've started off with this whole interest rate, cut. We talked about the economy, jobs. The more people lose jobs, and we've heard a few companies, few plants closing down. We've had a few of these companies, and that's usually one of the first places where you start. And unfortunately, shouldn't be doing it, but you stop your life insurance, you stop those type of policies when things tend to turn sour. I thought the results looked good. I mean, so let's look at that. Embedded value that actually it grew. I mean, that's really good. 15%, still trading at a nice discount. I think it's sort of round about the 20% discount, if I'm not mistaken. So that's good. But I think the two things that stood out, I mean, I've often had this conversation, any company that's buying back their own shares do have the confidence in their own company. They bought back, two odd billion rands worth of stock this year. They just applied again to buy back, another 1 billion rand this coming financial year. That's usually when your company has got confidence to buy their own stock, that should bring some, let's call it just some confidence, to some of the shareholders. That's the one side. The other side is when a company, don't buy or buy back their own stock, it just shows them they're not seeing other opportunities in the market either. And that could be an interesting one.
Yeah, I like your point around that. Buybacks are great, but it also says they don't know what else to do with their cash in many cases. Schalk, question coming through around Life Healthcare. It is ex-div today for a special dividend, so it looks terribly ugly, down, some 19%. But that's a special div. And to be clear, second in about a year and some change. The question is, either of the hospital groups worth a look? I mean, I suppose we could look at Remgro. They've got a lot of hospital in there, and then the Netcare and the Life Healthcare. A sector you're interested in? Any of them? I mean, we get sick. We need to go to hospital.
Yeah, it's sort of a death and taxes. so yeah, it's those type of products and services we need. When we look at this, will be now a more pure hospital. So from a valuation point of view, not that expensive, not my favorite. I mean, if you compare it currently with the other, let's call it listed hospital, and the likes of the Netcare, it's definitely cheaper compared to Netcare, but it does the growth is also a little bit more subdued. But you mentioned it, one of my stock picks, I think a few weeks ago. Yeah, I'm still sticking to Remgro. When you buy Remgro, the intrinsic value, around about 30% of the intrinsic value is Mediclinic. That Remgro, as we sit here, still trading very, very close to a 40% discount to intrinsic value. That makes it, I mean, for the bean counter, I think even David would love that. I think David's two favorite words is free, and then the second one is discount. So discount this one must attract most people out there.
David, some free discount. What about hospital stocks? Netcare, Life Healthcare, Remgro?
It's got to be the worst industry in the world. It's because the government are constantly going there. They're trying to get the drug prices down. They're trying to there's more and more regulation. And you can understand, when people get sick, they don't want them to pay more. And they don't want anybody to benefit from people getting sick. So it's wherever you look globally, it's a very difficult industry. And the other thing, we come back to medical aid, to insurance policies. People are slowing down on that. You're not getting the increase in membership. And if they are staying on, they're kind of tailoring it to their budget. So they're not fully comprehensive. There's always down to it. So it's a tough industry. And you can't make super profits. You're going to feel pretty guilty if you're making super profits because people are getting sick. Getting sick, yeah.
But then, David, what about, and I think we have chatted it before, is it Skylar? What's that? It basically medical equipment out of the company in the US.
Oh, yeah. Different story.
Yeah.
Medical equipment is a different story because one of the reasons is if they make a machine that surgeons use, surgeons are not going to retrain themselves. So they start to get a monopoly on various things, and if you want a doctor to join your hospital and you say, we haven't got the Da Vinci out of Intuitive or any of these things, then no, I'm not joining, otherwise you've got to reject. So it's a one side that I think has got a bit of protection against all the issues that I'm talking about, the science side, the robotic side. Yeah, I like that side of the business.
Striker, that was the name I was looking for.
Striker,
yeah. Striker.
Don't they make the things that people hobble around on, when you get old people in Discam or something going to fetch their medicine, they've always got that walker. Isn't that a striker one?
I don't know, David. I'm not. You should be careful there. You're almost one of those old people, and one or two of them might be our viewers. I'm not going there. Schalk,
I was there this week.
moving swiftly along. Schalk, a question coming through. We've had good results from Reits. We've had, what have we had? We've had Attack, we've had Growth Point, we've had High Prop. They've all actually been not bad. The question is simple. What's our guest's preferred REIT on the JSE?
Yeah, I think last week my stock pick was Growth Point, so sort of fresh in the mind. I still own Growth Point, so let's just get the T's and C's out of the way. Most of these property companies that reported lately had a few things in common. They mentioned the vacancies, how that has come down a lot. They've mentioned the favourable interest rate. We've started off this program talking about interest rates. You know, the forecast is down or unchanged. You know, and if that's the outlook, this is a sort of a positive environment for listed properties. And then less load shedding. I mean, that's also positive. That's also a general trend for most of these companies. So bringing it back to my recommendation, High Props, they brought out, I think, results or update now recently.
Yeah.
Attack looking good. I mean, they also, I think it was yesterday, brought out update results. And Growth Point, I think a week ago. Growth Point still trading around about a 28% discount to its NAV. And for the listeners out there saying it's totally justified, it's a property company, mostly in South Africa. One would argue and say if you turn the clock back less than 10 years ago, it was trading at a premium to its NAV. So I do think that NAV is attractive. Add in that a dividend yield of 8.5% to 9%. I do think that it's still looking attractive. Definitely a hold in my view.
David, for you, a REIT.
They're looking good. And I'm not a REIT person, but with interest rates coming down, I do follow the market on a day-to-day basis. Split it up into resources, industrials, finance, property, and property's always ticking up. It's always moving up there as well. I think yields are starting to look good, and also we've got rent revisions not falling like they did, vacancies stabilizing. So generally, I think there's a better picture unfolding. It's early days, but don't ignore it. Just keep your eye on it.
And they had a great 2024, and they're having a decent 2025, and some good yields to boot. Question coming through around Glencore. David, let's start with you. And the question is, what's happening here? I hold it, but it's been doing poorly, even as we have seen other miners do great. What's the story with Glencore? It's had a poor 2025.
They're heavily in coal. And coal prices have come down a lot, both thermal and metallurgical. So I think that's one issue. The other thing is there's confusion about where they're going. Remember, they took over Tech, they did a JV with Tech where they put it into a coal company, and then they wanted to take over Tech, which Anglo's has done, and then they're after Rio, who knows? They're all over the place. So I think there's a lot of confusion about where they're heading. And if I recall, I think their copper side didn't do that brilliantly. So they're buying back shares, as Schalk said, they think it's cheap, and they're putting a lot of money into buying back shares. So I don't know. Just very broadly, Simon, the diversifieds haven't done that well. Billiton, Anglo on the deal has done well, but Billiton is South32. All of those have been pretty stodgy relative to the rest of the mining sector. Maybe it's 2026 will be the year. As we said with Wayne McCurry in 23, 24, 25.
Hey, Wayne is right now. I mean, some of those stocks are moving. We're going to get Wayne on one of these days just to let him do his lap of glory. Schalk, your thoughts on Glencore? Because it has been, I'm looking at some of the charts. I mean, Anglo's maybe a little different because of all the corporate stuff, but hasn't been a great couple of years for the diversifieds.
Yeah, no, it's been a tough time. Like David said, I mean, there's not a lot to add. When you look at the portfolio, roughly about 45% of their portfolio is made up of energy and the steel making coal, and that, as you mentioned, has been under pressure. David, I tried to look for it, but I also recall that their production figures didn't look too good on the copper, but still. looking at the second half of the year, they were a little bit more upbeat. So again, with a bit of hype around copper, might be something to look at. I think to the viewer's question, this person asked and said, well, it's been struggling. And I think what this person may be asking, so should I be selling? Is there something, looking wrong with the company? And yeah, no, nothing looks, specifically wrong. It's just, I think the specific portfolio. We've seen it in the likes of Billiton, the coal side, been a bit of a ball and chain, and we're seeing it in Glencore as well.
Yeah, absolutely. I mean, but Anglo's got the corporate restructuring, which I think has perhaps helped
Different
them.
story.
Yeah, different story. Schalk, staying with you, question, simple one, MTN or Vodacom? Or maybe neither?
Yes, I own MTN. So again, I think it's sort of a what you want, and then I know where David's going to go with this again. It's one of those companies where we've had a lot of question, and I totally agree. It's a difficult industry to be in. People, as David usually says, people want these data for free. They don't want to pay for things. But I mean, and MTN also now got that possible case action from the US, which could be a case for maybe not for the widows and orphans. We had a bit of a look at it. There was a great report that came out from Standard Bank Securities where they look at specifically the Lafarge case action, and that was an interesting read, where eventually the penalty that was levied was about $780 million, and they actually sort of debated why that, if we go down a similar route for MTN, this could be sort of a worst case scenario for MTN. So when you look at MTN currently, they just recently, you can see Bloomberg's, they actually upgraded the target prices to around about 165 Rand per share. And in this report, Standard Bank argued that if it goes sort of the worst case scenario similar to Lafarge, $780 million US, you should knock off around about, let's call it 7 Rand of your target price.
Wow.
So even if you knock that off, you're looking at let's call it 158, 160 Rand target price company that's still paying a nice dividend. And I think there's possible upside. It seems like CEO Ralph is doing a great job. So yeah, I'm definitely still holding my MTN, but we'll definitely be monitoring this possible case action.
Yeah, David, for you at Telco,
X-growth, full stop.
There we go.
Yeah, as Schalk said, it's a very difficult industry.
Yeah.
We want everything for nothing. And we want you to put up 6G towers now, but we're not going to pay for it. So,
And it was interesting. It was interesting, David, to your point. I mean, I totally agree with you. In the recent report, CEO Ralph Peter, he actually mentioned something that I found really interesting. He mentioned that they've got a customer base. MTN's got a customer base around about 300 million customers. And he said probably about 50%, that's quote unquote, 50%, of their customers are not using data yet. They're still very much on the old, push to call, this old digital call, and they still see some opportunity for this. Let's call it 150 million customers to be moving and take advantage out of data. But yeah, I agree with you. It's we're talking about going from let's call it call services to data services. Neither of these two anybody want to pay for, and I think the margins will be under pressure going forward.
Yeah, no, it will be and have been for an age. Schalk, let's stay with you. Premier Group, it was a trading update, I think, yesterday. It was a good-looking trading update. And the question is, have I missed the bus? Is it too late to look at a buy here? It spun out of what? It's been about a year and a half or so in the market?
Yeah, it's been a little bit more than a year in the market back. It's not a dripping roast anymore. I think that's what the viewer is asking. I mean, it's trading. It's trading up again today. I think 4 or 5%. So after the trading update, 22-30% increase in HEPS year on year. I just quickly had a look on Bloomberg consensus, and Bloomberg consensus still have them on just over 11 Rand HEPS. And if you take that, that's about a 3% increase from last year's level. So this let's call it the trading update is looking really good when you read it, but not really way out in terms of what was expected. The valuation is not attractive anymore. And when you look at the forecast, I had a look earlier today, and I think they target price is still about 165 rand. So upside, more or less, let's call it 8-9% upside. I don't know if that will really get me to sell the likes of the AVIs and go towards Premier Foods.
Yeah, David, for you, I mean, and looking at the chart, I mean, this was a $60 stock a little over a year ago. Now it's a $150 stock.
Yeah, look, it was a baker, like Tiger Brands. They made bread and cereal, and they were more trading. It was more a commodity trading company. They are trying to shift that to where the original competition with Tigers took place back in the old days. You know, Premier and Tigers used to, they were not rivals, but competitors. And I think they're trying to get back into diversifying out of just, you know, baking bread and so on. So, listen, I'm impressed with new management, but sooner or later they're going to knock their head against Chart Kruger. I wouldn't do that. If ever you shake hands with him, he just crunches your hand. He's a tough competitor. And I think he's doing pretty well there. But, you know, credit to them for doing what they have done. I don't know whether it's too late or not. I really couldn't answer that.
I just want to add, sorry, Simon, a very, very interesting factoid in that trading update. I've found that they mentioned the deflationary environment for their softer commodities a lot more interesting. Now that's beneficial. When you look at the likes of sugar prices, that's down over the last year over 25%. Wheat prices, that's down 7% over the last year, and we can go on. Naturally, that's a great environment to be in for the likes of Premier Foods, because you know the ingredients as David mentioned, they've got blue label. You know, they've got the breads. I mean, when the wheat prices come down, naturally it's beneficial for them. You need to take the view: are we going to see a let's call it a similar environment going forward in some of these softer commodities? And most of the more intelligent people than I am are feeling that we're going to see some inflation pressures going forward, and that might just, like I mentioned, Premier Food might just not be the dripping roast that it's been a year ago.
Yeah, okay, no, great point. And it is softer commodities help, but I mean that price has absolutely moved. Let's go to some stock picks. Schalk, we had a question around Richmond. That's moot because you're choosing LVMH, offshore luxury. Well, so is Richmond in a sense, but LVMH is your pick.
Yeah, I'm going luxury goods. I was sort of going in between because I do own both. I own Richmond and I own LVMH. It's not Richmond I've had for many years, but LVMH I've recently started to nibble on. There was a luxury retailer this week, Watches of Switzerland. They came out with a report stating that they don't anticipate an immediate, or let's call it a material impact from the US tariffs. And we know that specifically some of these LVMH's companies have been under quite a bit of pressure lately, share-wise, for these tariffs. People got quite a bit of a bad outlook, and I think a lot, or even more, bad news have been priced in. This is not a value company. Don't by any chance look at a LVMH or a Richmond saying, "Oh, and I'm going to wait for single digits P's," because you might be, waiting a hell of a long time. But I mean, it's a quality company, both these companies, and I do think that if the tariffs are not going to have that material effect as some of these watchmakers now, watch sellers are indicating, yeah, I think LVMH are looking attractive relative against its historic valuations.
Yeah, and important point, against its historic valuations, because these things are seldom cheap, if ever. David, a stock pick from you at the top of the show. You were scratching your head. Have you had any deep insights?
Schalk's going LVMH, which I love, and I still hold it. Then I'm going to go for my fallback, which is Ferrari. And the simple reason, I've never seen analysts so bullish, which is always a worrying case. When they get too worried. But still, hopefully their dreams are fulfilled and the share price keeps going up. But I always love it, if ever, it's still one of my favorite stocks. But I must admit, at this point where we are in the market, I think we need a bit of a breather. You remember, Simon, when we started off, in the early year, we would have been happy with 8. I'm talking in the global market, 5, 6, 7, 8%. Yeah, it's a lot higher than that now. But I like good markets. I'm not going to talk it down.
No, don't talk it down. And race. The problem with Ferrari, and I've made this point before, you guys saw the Dutch Grand Prix. Like, they can't finish a race, like the two of them. I've always said, if there were two Ferraris on the grid, they would end up third and fourth. Somehow they would beat each other and come nowhere.
Man United supporters. Man United supporters. It's exactly the same. And they both got the same colour red.
Yeah.
So,
okay.
It's just continual disappointment.
I've been a Ferrari supporter since Jody Scheckter, and it's been painful, except for a small window. But that's all about me, and that's all for Stockwatch today. Thanks to our guests, David Shapiro, Sasfin Securities, Schalk Louw, PSG Old Oak. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.